Welcome back to the Construction Accountant's Toolbox Foundations series. I'm Susan Marinaccio. In today's lesson, we're covering one of the most important concepts in construction accounting, the construction job budget. If you've watched my previous lessons on KPIs and the WIP schedule, today you're going to learn where many of those numbers actually begin. And if you're just joining the series, this lesson stands on its own, but it also lays the foundation for many of the concepts we'll cover in future lessons. Every major job performance number, your WIP, your percent complete, your job profitability, and your projected profit, depends on one thing: the quality of your job budget. If your budget is wrong, every decision built on it becomes less reliable. If you've ever wondered why your WIP doesn't make sense, today's lesson will probably answer that question. Let's start with a definition, because people mix these up. The contract price is what the customer agreed to pay, and it's typically adjusted through approved change orders or other enforceable contract modifications. The job budget is different. It's your internal estimate of what the job will actually cost you to build, broken out by cost code: labor, materials, subcontract, equipment. This is your baseline. Every actual cost that comes in gets measured against it. So why do we even use a budget? 4 reasons. First, it's the yardstick. Without it, how's the job doing is a guess, not a fact. Second, it breaks the estimated cost of performing the contract into cost codes the field and accounting team can actually track. Third, it catches problems early, in month 2 instead of at closeout, when it's too late to do anything. And fourth, it's the one number the estimator, the PM, and accounting all have to agree on. One number, one truth. So what actually goes into building a budget? 5 things. Direct costs by cost code: labor, materials, subcontracts, equipment, labor burden. And I mean the fully loaded rate, not just the wage. General conditions: supervision, temp facilities, permits, the job-specific overhead. A contingency line, if your company uses one, a built-in cushion for the unknowns. The last component is your original estimated total cost. This represents what you believe the project will cost when the original job budget is established. At this point, it's based on your best information: takeoffs, historical job costs, vendor pricing, labor estimates, and project assumptions. As the project progresses, actual conditions will change. Material prices may increase, productivity may improve or decline, and field conditions may require additional work. When those things happen, accounting and operations update this estimate. That updated estimate becomes what we'll refer to throughout the rest of the series as the current estimated total cost, or EAC. Here's a formula worth remembering: contract value minus estimated total cost equals estimated gross profit. And here's the key: all of this has to come from real data. Estimator takeoffs, historical job cost, actual vendor quotes, never a gut number. Now let's flip it. What happens when you don't have a real budget? Cost to complete becomes a guess, which makes percent complete a guess too. You can't isolate which cost code is actually bleeding. Is it labor, material waste, a bad subprice? You lose your early warning system, so problems surface at the end when it's too late to fix them. And bonding companies, lenders, and CPAs expect to see budget versus actual. Weak or unreliable budgets reduce confidence in your WIP, your forecasts, and your financial reporting. One of the biggest misconceptions in construction accounting is confusing the original job budget with the current estimated total cost, or EAC. The original job budget is your approved baseline at the start of the job. Actual performance is measured against it. The EAC is your best current forecast of what the job will ultimately cost. You update the EAC when actual pricing changes materially, when productivity issues appear, when field conditions increase expected cost, or when a bid-side miss is discovered. You update the job budget itself only when an approved change order changes scope and related cost, or when the company formally approves a budget transfer or revision. And here's the bottom line: do not erase the original baseline. The variance between the baseline and the current EAC is what tells the story. Here's the number one mistake I see over and over: Someone updates the contract price for a change order, but forgets to update the cost budget to match. This can create margin that isn't real and distort the WIP calculations that follow. Here's the connection I promised you. Percent complete equals cost incurred to date, divided by the current EAC. If that denominator is stale or wrong, percent complete is wrong. And that means earned revenue is wrong, over and underbilling are wrong, and reported profit is wrong. The original budget establishes your baseline. The current EAC is the number that must remain accurate as the job evolves, and it's the number that actually drives your WIP schedule. Let's make this real. Scenario A, a $500,000 contract, EAC priced correctly at $400,000, $200,000 in cost to date. That's 50% complete and earned revenue of $250,000. Now scenario B, same contract, same actual cost to date, but the EAC was understated at $350,000. Suddenly, you're at 57.1% complete, and earned revenue jumps to $285,714. Nothing changed except the estimate. A $50,000 understatement in the EAC overstates percentage complete by 7.1 percentage points and earned revenue by $35,714. That's the garbage in, garbage out risk of an unreliable estimate. 3 things to remember. 1. The budget is the baseline. Every other number, your WIP, your percent complete, your job profitability, depends on it. 2. Build the original budget from real data, then review budget versus actual monthly, and update the current EAC when facts change. And 3. Every approved change order adjusts both the contract value and the related EAC. Next time, we're tackling the question every controller dreads. What do you do when you bust your budget? Grab your free controller's monthly dashboard at constructionaccountantstoolbox.com and subscribe so you don't miss it.